Well, our featured guest is Allan Small. He says the upcoming U.S. election could provide investment opportunities, particularly if a Republican is elected. What do you think?
Yeah, so statistics clearly show that when you have an election year, that the markets do well in general. It doesn't matter who wins, the incumbent or not, but the statistics show that if a Republican, I guess, defeats a Democrat that is currently in the White House, that has actually the best rate of return at that time. So for me, it's just another reason why it's a good time to be investing in the U.S. You couple that with stronger economy, a resilient economy, lower oil prices. We saw oil again start to move back down towards $70 a barrel. Doesn't seem to be any pressure there. And I think, a great time to be an investor in the United States. And that's why their market has outperformed pretty much everybody else.
How important are the congressional elections, the House and Senate elections, do you think, to market?
I think big, yeah, big, obviously. And anytime you have more of a pro-business, I guess, Senate, or if there's a change in hand, and I think it's important, definitely, and the markets take it as very important, especially, obviously, U.S. markets.
What about things like that Trump has promised, like a tariff of something in the order of 10% on everything coming into the United States?
Yeah, a little scary when something like that is said. You know, he says that. I think he's playing to his constituents. I think that's what they'd like to hear, right? I think they want to hear buy American and only American. I don't know how likely of that happening is. Obviously, if that were to happen, inflation would start to run significantly higher. So perhaps the Fed doesn't like to hear that. But I don't know how likely it is that something like that would actually indeed follow through.
What about his browbeating of the U.S. Fed chair, like during the first term, the things he said about Jerome Powell, his desire to put pressure on the central bank to reduce rates?
Yeah, and he's actually said, come out and said that he would remove the current head of the Fed. But you hear Jerome Powell speak about this. He just says he's focused on the economy and interest rates and trying to, there are dual mandates, stable inflation, stable prices. So it's, I think he stays out of it. Whether or not, if we do get, a new, or I guess former President Trump back in the White House, whether or not he actually goes through with it and changes the Fed, the head of the Federal Reserve, it sounds like he will. Who he brings in, that'll be the question.
Another thing you're watching is the gradual return to work. I find it amazing that many people are still working at home at least part of the week. But big companies are telling their employees it's time to get back to the office, and you think that's a plus?
Yeah, absolutely. I think that's been probably the biggest benefit, or the biggest thing that has brought down inflation. You have people going back to work, the workforce coming back. We're seeing an increase in supply, increase in efficiencies. We're seeing that right across the board in the United States. Companies like IBM saying, if you're not coming back into the office, then you can't work here any longer. And that's, I figured that would happen at some point. It's taken, obviously a few years to do that. But I think it's helped a lot with supply chains. And to me, that has been the biggest thing that has brought down inflation. That, with lower oil prices, better supply chains. I think there, even though the Fed has raised rates, which has obviously slowed down the economy a little bit, in my opinion, the workforce, people coming back to work, has been the biggest blow to inflation.